Hi everyone, welcome to another Learn, Grow, Invest video. I'm Jermaine, co-founder for this community. Today we're going to be going through the Dolla Financial Services Limited offer for shares, their IPO. So we're going to be going through the prospectus, and what we typically do with that is go through just some key areas. We're not going to go through every single aspect of the prospectus. That would be impossible in terms of what we hope to do. Typically we do these sessions in about 60 to 90 minutes, but we'll go through the key areas, look at an overview of the company, understand how much they're trying to raise and why. We'll speak to the details of the offer, and then we may look at what the position on the company will be after the offer is complete, because that's typically shown in the prospectus. Third, we look at their dividend policy. Are they planning to pay a dividend? Is that something that they've outlined in their prospectus? We look at that. Next, we look at the financials along with the management discussion and analysis, because that's the management overview or outline of their historical performance. So we're going to be talking about that. And then finally, we'll talk about what we are expecting to come, things like how to apply those basic things that you'd want to know if you're interested. Now, this is definitely not going to be financial advice in any way, shape, or form. This is just meant for information purposes, for education purposes. So we're just trying to help persons who maybe are unfamiliar with how to go through a prospectus, how to read certain aspects. We're going to help you with that. But our goal is not to tell you whether or not this is something that you should purchase or not. All right? So before we get started on our opening prayer, let me know where you're joining from. Let me know if this is going to be potentially your first. Well, let me know if this is your first time joining us. I'd like to know where you're joining from. And let's get started. David Rose is going to be joining me soon, along with Chika Verway. So I'm going to open with a quick word of prayer here. Thank you, Lord, for this day. Thank you for the ability to learn, grow, and invest. Bless this community, Lord. Give us knowledge, wisdom, and insight. In Jesus' name. Amen. All right. Okay, cool. So I see Nikolai, I see Sean, I see Miles, I see Sherilyn. Let me know if I'm pronouncing that correctly. I see a couple of our Telegram group members as well. Good to see you guys. So let me prepare to share my screen. And I see David here. David, let me know when you're ready to join. I'll just bring you on stream. Ready to go, David? It seems like you're in darkness. That's why I'm asking you. Okay. All right. Oh, Canada, that's nice. St. Elizabeth, Ocherius. There we go. Tyrone, I'm hoping that we'll be able to have a session in Ocherius one day soon. All right. Hey, David, how are you doing, man?
Bro, the place is hot. This is very hot.
Listen. It's ridiculous.
So you see, when the light was off, it was also for another reason. I tried to. And remember, JPS, is free. Is getting 20% subsidized on the 200 kilowatts. So.
Yep. All right. So, David, I trust that you got a chance to read through. I did not get to finish everything, but just enough to cover, what we need to talk about here tonight. So I think that's good enough for us to at least get started here.
It wasn't. I remember that for me, I had to kind of read earlier than planned. Article came out on Sunday in the Observer. So.
Yeah. Exactly. All right. So what we're gonna do, guys, is let me just get this disclaimer up here, since David and I are here. Anything that David and I discuss for any company at all that is possibly mentioned here is not going to be financial advice. It is for discussion, education, entertainment, and illustrative purposes only. The community is called Learn, Grow, and Invest. It's not meant for financial advice or solicitation in any way. All right, just have to get that out of the way.
Yeah, have to do the legal part,
Yes. And so, as I said before, what we're gonna talk about is really these key areas. Other things may come up, right? Because there's certain things that we'll see that we'll kind of discuss. Some things we may go down, we may go off on a tangent to discuss. I think it's important to do those things because we can't invest in a vacuum, right? There are things that impact our outlook that we'll need to bring up. So just bear in mind. And as I said, just you can expect somewhere between 60 to 90 minutes for this conversation. All right. I'm seeing Chike backstage as well. Chike,
Oh,
good to go.
the quote unquote general of risk tolerance. Sorry, of risk
Me?
aversion.
Hello. Yeah. You'll never hear anything less from me.
Anyway, I mean, to each his own, right? Chike is very deliberate with his investments, which is good,
If
right?
you don't meet the criteria, he throws it to the gully. Simple as that.
All
Literally.
right. Okay, guys. So let's start with the company. All right. So I have the overview here, but we're gonna take a look at their website, take a look at the company overview within the prospectus. So they were incorporated really in 2009, and they started offering remittance services, loan services, etc. But they actually shifted from that model. Let me actually find it in the prospectus as well. Um, they shifted from that model, I guess, after they assessed the let me find it here.
I know we're speaking about Jermaine, and you've gone
Yeah,
too far. You've gone too
gone
far,
too far.
Jermaine.
All
Yes.
right, bring it back for me now.
So I can give the basic overview and history of Dolla. So for those who don't know, before we got to the current point Jermaine had on his screen a while ago, Dolla Financial Services Limited, incorporated in October 2009. It was a subsidiary of the Stocks and Securities Limited. The brokerage firm on Hope Road was a
Mm-hmm.
subsidiary of Stocks and Securities Limited. SSL, sold part of the company to a Haitian firm. I'm not sure what happened after that in terms of getting back that stake. Then you had SSL, you know, uh, selling their 75% stake in Dolla to first to a Capital Holdings Limited
Yeah.
at US 500K, which gave the company, I think it was a 670K US valuation. Then a year later, March 2022 was when First Track Capital bought that stake. Then in January 2021, First Rock Private Equity Limited, and that's actually the trading name. The actual name for the company is First Rock Global Holdings Limited, and it's based in Barbados. They bought a stake from First Rock Capital Holdings Limited for US $1.1 million, which valued the company at around 1.5 million US dollars. And then no, First Rock,
1.5 billion Jamaican dollars, me.
no, I said
Well,
US 1.5 million.
okay, okay.
Yeah. And then now, what you have happening is that you have First Private Equity selling some of it, selling most of the stake, they're selling 125 million shares at, no, 187.5 million shares out of the 250 million.
Yeah.
And if the company gets listed and offers successfully taken up in full, meaning 500 million and above, First private equity stake reduced to 60% in the company, it will be
Mhm.
worth 1.5 billion Jamaican dollars.
Yeah, and we'll go through that breakdown soon because we will look at what the shares will look like pre and post invitation. So we'll talk about
So,
that.
for context, that was basically SSL's venture into, that sweet spot of financial services that the group didn't offer because they're not associated to a commercial bank. They're a brokerage firm. So, this was their venture into remittance and bill payments and cambio services. And then on top of that, loan services.
Okay.
So as you can see to the left right there, it highlights, back in 2018, the company decided to, surrender its cambio license and put capital to loan financing services because I remember when I was in high school, which wasn't that long ago, where I'd pass Dolla in Barbican and I would see a cambio operation. I've actually bought US from Dolla at one time before. Like at the Barbican location when they actually did a Cambia operation.
Mhm.
And the company decision to focus more towards just one particular niche is a better opportunity for them, which has been
Yeah.
manifested, rather than actually being in so many diverse spaces. Because what we determine is that when you come on to a Cambia operation, you have to have a good amount of capital going towards treasury to manage those operations. So this
Yeah.
is where Dolla
I'll
is.
say that one of the things we comment on here a lot is the business, right? Because we like to look at business models, how the business is structured, etc. When we get to the products that they offer, I thought it's very interesting how diverse their portfolio of services are, and you see the different segments that they focus on. Right? We can actually get to that soon. Well, I mean, we covered this pretty well already. I think we'll talk about Outlook soon. We'll get to that. But let me go to now their services. Right? We speak about what they offer. Let's speak about its services. We'll get back to Outlook at the countries that they operate in, etc.
Sorry about that.
Yeah, man, cool, no problem. All right, so this is David. This is probably.
Oh, that's
something
yeah. So
yeah, man, go ahead. I was gonna say if you wanna comment on the corporate structure as well.
oh well, as you can clearly see, it's currently a subsidiary of First Private Equity and an associate of the Equity Capital Management. And with respect to Dollar Financial Services Guyana Inc., which is a subsidiary based in Guyana. And they're still looking to expand further into the rest of the Caribbean. Bahamas being one territory they're applying for shortly. So as you can see, this is where Dolla is currently structured.
Yeah, and I speak a lot about expansion. So that was definitely one of the things I saw in the prospectus, where their plans to expand, locally as well as throughout the Caribbean. That's something that is stressed a lot. It mentioned here, I don't know if you spoke to this specifically about how they kind of acquired a company called M24 at the time. Katie Mears, the current CEO, would have been hired at that point to lead and spearhead the company from that point, and he would have moved on from M24, and he spoke to their plans to further acquire companies. We'll get to that in terms of use of proceeds. So just a little bit there. We're going to talk about the portfolio on the very next page, I believe, in terms of the products that they offer. I thought this was interesting. So they have here 8 different types of categories for their products, and it seems to touch on certain key industries. So they have the micro funder, which is tailored for micro enterprises. You have the Dolla SME Grow, which is for small and medium enterprises, and Dolla Elite, which is targeted at high net worth clients. And I was hoping to see, they probably couldn't share this, but I'd love to be interested as to what makes that client eligible for that segment. That was, interesting to see there. There's the line of credit. I thought this was interesting. This is something that you typically see banks offer in terms of just having that facility. You have Dolla Value Personal, which is for employees of both private and public companies. So this is like a payday loan kind of thing. One and Ready is interesting, geared towards taxi operators. They have the Fix Up Your Bar, which is for bar owners. The Medipay, which is for medical or cosmetic procedures. Forepay, which is for persons to work on their homes, renovate their homes, etc. So a lot of things that are being offered here for different segments, and
There's no carnival one.
It gives me the impression that they're positioning themselves to touch on as many industries as possible. And one of the things I said in the prospectus is that they try to position for industries that are doing well in a pandemic, right? And when we get,
Jermaine,
yeah, go ahead.
I was surprised I didn't see anything for Carnival. What I was going to point out was that in the comments, Llewellyn Smith pointed out Scotia Line's a line of credit product as a
Yeah.
comparative towards what Dolla is offering.
Yeah, that would be similar to the Dolla line of credit there. Yeah.
Yes.
Mhm.
And what I was also going to point out was that if you read, there was an analysis, but the story of Kadeen Mears with respect to Dolla, and he pointed out that the way it started the business was to serve entities and persons who couldn't go to the banks, but they're in spaces in the economy that generate a lot of value. And
Yeah.
this is the kind of where you see Dolla kind of thriving because the quote unquote informal economy has a lot of value, not illegal money, but real value that it just really ignored.
Yeah. Yeah. So there's definitely opportunities there. You see from this graph
And for
here,
context, as you can see, 80% of their loans are between Dollar Elite
that's what I was
and
going to
Dollar
say.
Valley Personal.
Yeah. Yeah. Which which really says there are a lot of opportunities to grow the smaller areas. It is a highly competitive industry, so there's definitely room for growth with visibility. Which is one of the things IPOs will do for them, make them more known in terms of marketability, etc. So yeah, anything else you guys want to add here in
I'll let
terms of
Chike go on.
okay, all right. So in terms of, there's a slide that I had as well, really based to show the parishes that they operate in. This is as stated in the prospectus. So something that probably be updated over time. When I look at a map like this again, I'm looking at where they are and where they aren't, right? So there's typically opportunities for companies. When they show a map like this to me, they're showing the areas that they cover and they're showing you potentially gaps that they can fill, right? So whatever parishes are not currently, housing a location, maybe that's something that can be added at a later point. And then of course they're in Guyana as well, and they spoke about what the outlook for Guyana is, and I thought Chike could speak to that, being that he's from Guyana as well.
Yeah, Georgetown, Guyana, actually.
Yeah. All right. So there's that. So let's get back to this. So let's talk about what they're offering now, right? So there was some confusion around this in some of the groups that we're talking about. So let's try and shed some light on that there. So there's some key dates to take note of first. May 19th is when the prospectus was released. The opening date is this Friday, May 27th. Closing date is meant to be June 10th. Of course, if there are conditions that may cause it to close early, like oversubscription. You'll hear the basis of allotment. So if you apply, you'll hear the amount of shares that you'll receive within 6 days of the closing date, whatever that
Should.
is. Yeah, you should. These are all ideal, right? Challenges may come up. Statements and refunds are typically within 10 business days of closing dates, and then listing again estimated to be within 15 days of closing date. As David said, if there's any delay, typically those are reported, and a new date likely projected from that point.
And the reason why I said should a while ago, the basis of allotment was because when you said will, it's like the persons know ahead of time that when the basis allotment comes out, that they'll be able to see, I think something come in their account saying, hey, you qualify for this number of shares, and no. So in the event that is oversubscribed, base allotment, will tell you based on the amount you applied for, if you have gotten all your shares or you need to do some extra math. So for those who don't know what I'm speaking about, so let us look at, for example, Spiritory, right? So Spiritory Jerry was also subscribed. The first 10,000 units were guaranteed, and then the remaining balance after.
You want me to find it or you'll share it?
I was gonna ask because I was gonna share my calculator.
Yeah, man, go ahead.
So, yeah, so I'm gonna share a calculator so you can see. Let me just bring up another tab. So you see my screen, Jermaine?
Yeah, man, I see it.
I wish I could make
I'm
it a little bigger, but
You
hey,
can't see that,
you know.
man.
So
Can't.
let's just say I have $100,000 worth of spiritual, which is
Wait,
$1
hold
per
on, David. Can you guys see that?
All right, let me just bring up Excel then.
I can't see it. Yeah, man,
Wait,
bring
no,
up.
at Excel, Google.
Okay.
Just remember, Google has everything.
Yeah, that's better.
Yeah, so 100,000 units at $1, right? So what's what happened is that first 10,000 units secured, right? So you have a remaining balance of $90,000. And in that case, with respect to the general public pool, or those who are not in the reserve pool, it was there was 10,000 units guaranteed, and then 11.67% of the remaining balance. So we had 11.67, 11.76. I can't remember the exact number right now, but I'm going to use 11.76 for context, right? Times
Yeah.
0.1176, which is 10,584. So you look at in 20,584 shares after the base development, and you'd have really left with $79,000 as extra cash, or in terms of a refund back to your bank or brokerage account. So that's all the base development is. It just tells have you received, everybody in a particular pool received their number of shares? Was it under subscription in one of the reserve pools, as we saw with the spiritual employee and key partners pool? So, and the thing is, in the case of under subscription for the reserve pools, those shares are rolled down into the general public pool, for those who don't know. So I would kind of help you guys understand, what the base development is like, and answer some of the comments in the chat coming up so far, Jermaine. I saw someone asking about if you're able to JMB customers, and someone said the contacted JMB early in the group, and the JMB said, that they're going to have it in the system by tomorrow. And the future context, guys, although you might see one broker in a prospectus at the time prospectus is published, in this case for the holiday, which was today, Labor Day, and persons were asking, JMB not gonna be the platform, and I'm like, people, wait. No, I'm joking, Jermaine. So for those who don't know, selling agent agreements have to be approved through JCSD and everything else.
And it has to do with the timing when it was released. This was released Friday evening, right?
No, the thing is that, I said it's really selling agent agreement, because I remember that TC Barita and Mayberry already announced that selling agents. So that's why I say, it's when the agreements are processed. So you might see other brokers coming out selling agents later in the week. So, I'd recommend you guys just wait until tomorrow, where you contact your broker and find out, what's going on.
Yeah, but I mean, so we'll talk about that near the end. But I checked out the VM Edge.
With IPO Edge platform, yeah.
Easy to register. I was registered pretty much in less than a minute, and so we're actually gonna show that near to the end. So I mean, that's also an option. You don't have to have an account with them. You can enter your account details for another broker.
Can we just go through some more comments in the chat before we go back on track, Jermaine?
Go ahead.
And we were speaking to about a while ago. So for those who don't know, with Wealth Edge, when you create your account, not a VM Wealth equity account, just an online account with Wealth Edge, you can add multiple JCSD accounts on that one platform. So you can add your account from your Sagicor, your NCB, and whatever to that one platform, and then you would just, put the amount you want for each subscribe each time, and you'd attach it in the bank transfer. You would just attach the transfer receipt and transfer number. And I seen the chat right here, what the smallest base development we've seen so far is either between.
That was main event, right?
No. So I said, wait. So I said it's either between Lumber Depot, Carbon Assurance Brokers, or Main Event. I said, don't say Main Event wasn't the smallest, though, Jeremy. That's why I said it's either between those three. I can't remember who was the smallest. I'm not gonna look for it right now, can look for it after. And when I see J. Simpson asking the what's between the money between the accounts. So it depends. And let me say why it depends. So in the example a while ago, you showed where putting more capital in that case where the pro rata percentage was 11.6%, would have been better in the sense that you would have gotten more extra capital after to put back into the market when the company lists, or you'd have gotten more shares to the pro rata. But sometimes it doesn't make sense depending on the size of the offer, the potential interest so far for the offer that's being publicly discussed, for you to put all the money in one account for the offer. Sometimes it's better to use.
So
I was going to say
I
sometimes
definitely want us to discuss all of this stuff near the end, though. I think it kind of fits better so that we can get through the prospectus and then we can touch on that stuff.
All right. Well, I'm just going to finish.
All right, you want to take one question and go ahead? No, man, finish your point. And I'm just saying, yeah.
No, so I was no, we're gonna get back on track after this. I'm just because the thing is, we don't want to make some of the comments pass us too fast, Jeremy, and we don't address them.
Yeah, man, I get you.
So what I was saying was that, spreading your capital amount between different brokers is good if you're a person who wants to get that kind of opportunity and as much shares that you can get in that sense. But what I'd also recommend is you also understanding the lead broker and their refund policy. So the reason why I said it is because I know persons who, for example, apply for JFP and we're waiting for almost 3 weeks to get back the refund.
Mm-hmm.
And in the case of JMB, I got back within like 2 weeks because JMB just sends the money off at one time after the allotment comes out to the lead broker and refunds this disperses capital back to the account holders. So that is what you do all the time. As much as you want to go heavy into an IPO, also remember your rate of success. If you're in the general public pool, it's rough. If you're in a reserve pool, you probably go a little harder. And what's next we're going to Germany? The pools next?
You might as well fight it out on the open market.
Jeremy, we're going to the pools next?
Yeah, man, we're going to them. Let me see if I added that slide. Hopefully I added it. Okay, here we go. No, it's not the pools. It's at the next slide. Yeah, this is what I have for them, right? So there's a reserved pool, which is, let me bring that up here. They have all of the pools explained. So you have the key.
You have to make that bigger.
Yeah, man, that was the plan.
Jimmy, go back to page 2 because the thing is, the reason why I say that, although we want to see definitions, you have to remember that the reserve pool is 2 actual pools combined, you understand? But you're seeing right there. So I'm going
to show the definition first, then go to this. Yeah. So this is it here, right? All right, David, you want to go ahead?
No, go ahead in this case.
All right. So let me start here. So 500 million ordinary shares at $1 per ordinary share is being made available, and it's comprised of 2 things, right? Two lots of 250 million are making up that 500 million. So it's 250 million ordinary shares being newly issued, and then existing shareholders are selling or making available 250 million for sales. So when you add those 2 together, you get 500 million. However, it's not 500 million new shares, right? So that was one of the areas that we saw some persons had some confusion about. Now that total 500 million is further being broken down into two key pools. So you have the public one, which is really 212,500,000 shares. So everybody outside of that key or reserved group is going to get access to 212 million. And that leaves 287,500,000 for the reserved shares. Now, how it usually works is if that's not fully taken up then the excess will be made available to the public. And then, as I said, for the reserved, it is considered employees, directors, and mentor of the company, and B, key stakeholders of the company as determined by its directors, inclusive of its customers, suppliers, also considered key partners. Let's see here, is anything else I left out here? As I said,
That's the definition.
Yeah. All right. So currently, there are 2.25 billion shares outstanding. That's the number of shares issued currently. The authorized share capital is unlimited, meaning they can, offer more shares later on if needed. But when the 250 million is added, the total shares outstanding will become 2.5 billion. All right, and that's what I had on this slide here, the previous one. All right. So maximum new shares issued, 250 million. Shares being sold by existing shareholders, 250 million. The amount they had currently, or the amount they have currently, the amount they will have after the invitation, the amount they can issue is currently unlimited. So more shares can be issued at a later date without them having to modify the authorized share capital. Right.
Definition, Jermaine.
Definitions, no.
You understand why I asked you to go through the actual breakdown now, Jermaine?
Yeah, man.
To the right, Jermaine, to the right. And scroll up.
Scroll up.
Yeah. So company reserve, no, the company applicants.
Yeah, man, right here.
The definition, I should say.
Yeah, you want me to read it out?
Yes, sir.
Okay. So it means 125 million shares in the invitation that are initially reserved for the prior to application from and allotment to the company applicants on the terms and conditions set out in section 6.5 of the prospectus.
I mean, the actual company applicant definition, Jermaine, not the reserve shares. The applicant definition.
Okay, that's employees, directors, mentor of the company, its affiliates such as the equity capital, First Rock Private Equity, and related affiliate companies, First Rock Capital Resource Limited and First Rock Capital Holdings Limited.
So basically, everybody else is going to fight out of a $212 million pool, and the majority shares are going.
It's another pool, Chike. Wait. It's another pool, Chike. Wait.
I mean, like, we're going around it, but the public is going to fight out 212,500,000 shares, and the majority of everything else of that whole 500 million is going to select blocks that all have to do with the company, its people, everything else. So, I mean, the focus of everybody here should just be: is either you fall into the public pool, or you fall into, what is it? VM is the primary broker there. So whatever allotment they might be getting. So if you're a VM customer in terms of investments, great, you fall into their pool, and then you have the
No. You the VM company, not the customer.
Chike, Olaf, Chike, Olaf. Just hold on for a minute.
Because
please.
I think that's what everybody is really caring about. Where do they actually fall into? So it's getting confusing.
That's what we're going through right now, and that is why I said hold up.
All right. So where do they fall into?
Jermaine, can you please go to the key partner section, please? Chike, just wait a second.
David wants to be sure there's no misunderstanding. All right, let me read key partners now. Means the key stakeholders of the company as determined by its directors, inclusive of its customers and suppliers who are determined as integral to the long-term success of the company, being persons presently assisting the company with developing its businesses and achieving its commercial objective, including VM Wealth Management as lead broker and its managed portfolio, as well as other selling agents and those persons with whom the company intends to collaborate in the future for such purposes.
So,
Alright.
so the thing is, this is why I said wait cheeky, because you nearly trick people out. People get confused a while ago, and people say I was confusing, and that is why I said just wait. And what I kind of wish that the breakdown here was I don't think customers is defined, Jermaine.
No, I didn't say that.
Yeah, and that's it. I pointed that out because it says
Yeah,
customers and suppliers. So you
yeah,
know
one
what
of the
that
things
means.
I wanted to know, because somebody asked us on Twitter, right? If you were to take a loan from them, would that mean that you're now a customer? If so,
And that is where,
is there a particular deadline? Is what's the definition of a customer? Do they have
and that
thousands of
is
customers? And if so, yeah.
and that is why that is why I said, this is be a good question for VM tomorrow at their briefing on Dolla at around
It's
like
not
between
tomorrow, it's
5 and
Thursday,
6.
right? It's Thursday.
There are different ones along the week. So I saw one with Kadeen and Dwight Jackson for tomorrow between I think 4 to 6. And then,
Okay.
you have to get at 8 o'clock. So, that is why, you can probably ask what's the definition of a customer, because if it is the case whereby it speaks to just any customer, there's some defined timeline, then you can go take a loan tomorrow and qualify for the pool.
Yeah.
And in this case, I also remember that in this quote unquote, until JMB state officially, you have JMB, Mayberry, and Barita also in that pool. So
Yeah.
this offer is really to go
Any
heavy.
other selling agent that comes on stream, right?
Exactly. So the thing is, this offer is going to be very competitive, depending on the uptake in the public pool for one, and the reserve pool as well.
Yeah. That's pretty much what Chike was saying,
And
though.
Jay Simpson, they have a special pool. No, Chike was saying BM clients. That's
No,
the difference.
I was saying he was saying that it's going to be very, very, very competitive. So
Yeah. But the
I
thing is,
mean,
you understand where I basically had to go through and say Chike, hold up, because he was saying BM customers, and I'm like, no, Chike, that's not it. You understand? Because
yeah,
VM Wealth and its managed portfolios is one thing. Customers, that wasn't in the mention in the prospectus.
I find this
right?
interesting though, but
No,
anyway.
Chike, remember Trans-American Highway? But everybody flocked to the toll offices to get their T tag to qualify for their customer pool. Remember that time, Jermaine? January
Yeah, man.
2020?
I didn't know that happened. I honestly
So,
didn't know
so
that
these things
happened.
happen. Issue
Yeah.
wants its customers to be a part of the game.
Yeah. All right. So let's talk about the existing. So currently, how the shares are set out. So number of shares before opening date, as we said, it's 2.25 billion that's currently available or issued. First Rock private equity owns 75% and equity 25%. That's gonna be updated after invitation, assuming that all the shares are taken up. First Rock goes from 75% to 60%, the equity from 25 to 20. The general public pool will represent 8.5%. This is one of the things we often speak about in the Telegram group, that pretty much the public in this case is going to have 8.5% of the total shares outstanding, and then the reserved groups make up 11.5%, right? So this is going to be the shareholdings as at after the opening date. And then, of course, this can change depending on how many shares are purchased, etc. All right, so I wanted to point out that they stated that there's no the intellectual property, that's the Dolla logo, that's what's being referred to there. I thought this was interesting to note just some of their existing agreements. So we're going to talk about the financials later on, but this would speak to all of their existing contracts. So locations that they have, rent they're paying, etc. If you're interested in this, you can go through it. There's no current litigation out as at the date of when this was put together, which was seemingly March 31st. We'll talk about dividend next, and when we get to the financials, we'll speak to that. I wanted to touch on this as well. It's not really financials that we're talking about yet, but well, we should probably save this one when we get to financials. So let me wait there. All right, so we spoke about that. Let's talk about use of proceeds. So they mentioned that they're going to use the anticipated proceeds of 250 million to expand its loan portfolio. So that's your primary business now. So they're going to use 250 million to expand its portfolio regionally through acquisitions, right? So we can expect to hear an update about that at some point. And to strengthen its capital base, the proceeds from the sale of shares, now that's other 250 million, will be used to settle existing debt obligations the selling shareholders assume on behalf of the company. So that means essentially those shareholders would have assumed some obligations to get the company some funding, and they're going to be repaying that. These proceeds will accrue to the benefit of the selling shareholders and not to the company. All right.
So I have a question. Stop right there.
Yeah, man,
David
right?
David will either can answer or will say, let us wait and see. I'm concerned with the 250 million that is going to the selling shareholders. So should I be looking to see who is exiting the show when they go live?
L.E.A.R.N said exiting a cheeky. They're only collecting some quote unquote proceeds from the offer.
Yeah.
So they have the shares.
Remember
they're still going to be the majority shareholders in the company after.
Yeah. So currently, First Rock Private Equity 1.6875 billion is gonna go down to 1.5 billion. So 187 million. Yeah. Right. And then
then
equity is going
62.5
from
million.
562 to 5. Right. So they're not necessarily exiting in any significant position there.
That's asking the question. People would want to know. That's things I would ask. So you see a line like that, you want to know what's going on.
It's not a lumber depot IPO kind of situation, cheeky,
No, that's fair. Again, I'm just throwing the question out in a general sense because you see a line item.
That's a fair question to ask, definitely. It's a fair question to ask, definitely, right? Because I remember we spoke about this when I think we're looking
skin in the game.
Yeah, man.
That's what you want to see. Skin in the game.
They still have skin. Only thing is that we might see. One thing we might see though is the directors. We might see the directors themselves finally getting some actual direct exposure because they only have 2 shareholders at the moment.
Exactly. All right. So that is one of the things that we may see change at some point, right? So I mentioned the acquisition. It didn't allude to that as far as I'm reading through the prospectus. I don't know if you guys saw anything about that, any upcoming acquisition.
No. So the thing is, even Associated Financial Services themselves are alluded to it, and they are a microfinance company, essence, or a microcredit company as defined by the Microcredit Act. So, and it's been alluded in multiple articles where, it's said that because of the required compliance for regulated entities, in this case, microfinanciers, after the act comes into force around July, with the BOJ being the central regulator, have some entities which will just step out of the space and sell their portfolios because the cost of compliance is not going to match their risk reward opportunity. So that's the thing about it, because they can always buy competitors in the region. So, for example, Access Financial Services bought a company in Florida, Embassy Loans, and respect to Dolla, the applications that they're alluding to, and they've alluded to it actually near the end of the prospectus, is about locally competitors, or I should say players, leaving the space after that goes into force, because even ISP Finance Services Limited was able to acquire some of Mundo Finance Limited's loans, and Mundo Finance Limited is an associate of NCB Jamaica. So there is some loan buying taking place in the space already. So the company can acquire another company, or they can acquire a loan portfolio. And for those wondering, how do you acquire a loan portfolio? Simple. the company can buy the portfolio at a discount, and remember the loan portfolio have a particular expected income stream or future cash flow from purchasing loans. So that's just one example of how an acquisition could be done for $1.
Yeah. And wasn't that similar to what happened with M24 when they first purchased
Yeah,
them?
Dolla bought loan portfolio from them.
Yeah. Amen. All right. And in terms of organic growth, they're mentioning growth in the Caribbean, wanting to expand their operations there. They seem to have a Caribbean focus. So that's something that is spoken about through the prospectus. So that's one thing to note there. All right, let's talk about the dividend policy. So it says if the company's ordinary shares are admitted to the junior market, the directors intend to pursue a dividend policy that projects an annual dividend of up to 50%. It doesn't say 50%, up to 50% of net profits available for distribution, subject to the need for reinvestment in the company from time to time. The board of directors may change this policy as a result of, among other things, changes in the return on equity of the company, its liquidity needs, or material changes in tax policy affecting the business, right? So understand dividends aren't guaranteed. That's one thing that you should note. Since it's saying 50% of net profits available, you want to look at that number, look at the shares outstanding. That's going to be 2.5 billion shares outstanding. And that will give you an idea if they were to pay a dividend based on existing net profits, what that might look like, right? So that's a quick way to say, okay, what might this dividend look like if this company were to pay, right? L.E.A.R.N is saying here that doesn't sound like they're saying much as it relates to how the proceeds will be used to grow. Exactly, right? So it doesn't, they didn't say like, Spiritually said they're going to purchase, exotic products. It doesn't say who they're going to acquire. It's kind of very broad. So acquisitions, expanding capital base, they didn't really go into it. That may be one of the questions that we can ask, Kadeen at some point if we're able to speak to him. But yeah, as far as I was reading, I didn't see any specifics of that. I don't know if you guys saw that.
No, the thing is that, and this is why I really believe that, we really need to have some more diligent requirements for use of proceeds, because these open-ended statements are really not attractive because no, what's real, Jermaine?
No, man, I agree.
See my hand just thrown up. I'm just sitting silently
No, because
listening.
in case of JFP, they said they're going to be working capital, and what did they do? Pay a related party, and then lend a related party.
Yeah.
That's what they would get the money. That's what the working capital was for. And in all honesty, I believe that the prospectus could have been more detailed. I'm not saying companies should give away their quote unquote secrets or what they're going to do, but at the same time,
no. Well, it seems to me sometimes companies just enter the minimum information required.
And that is where
that's where there's a problem. It's a disadvantage. It's a disadvantage to the outside, to the potential shareholder. That is not an insider.
Remember, it's something that I had mentioned to Tyrone when I interviewed him, that I wish companies would share more information overall, because apart from the quarterly reports, you may get 3 or 4 articles per year for any company. That's it.
And then you have to be like some detective on a hunt trying to figure out what is going on. We're dead serious. Let's call a spade a spade. You have to be on a hunt. Understand? Thank God for David and you and everybody else that actually goes down to actually try and break it down and find where all the information is.
And this is why I believe the FSC needs to do their part and actually just talk with the public and stop hiding, and actually, from a real perspective, go to an SEC-like standard where you're required to answer minimum questions. Because of Price Smart and Apple or whatever, and look at their annual report, there are questions going down an annual report meeting the 1934 Securities Act, and you actually know, hey, the company has litigation? No. The company has mining operations? No. You actually are forced to actually disclose and be transparent. We have a big transparency issue in Jamaica.
Yeah.
And you just get worse, in my opinion. But more requirement disclosures.
So I want to be clear that what we're not saying is that the company that we're reviewing is not being transparent. We're just kind of making the point in general that we wish we had more information. So that's what we're saying here, guys. Just to be clear.
Thanks for the discussion, Jermaine, because I'm not saying, no, we're just saying that, we get that, you can't be specific as to what you're doing because you're probably in a space that, in other Caribbean regions is regulated.
They mentioned it's highly competitive. Yeah.
No, I get that. But at the same time, I'm not saying give us the entire bone, but at least give us some meat. I'm saying companies do not have to sell themselves to the public. But at the same time, ensure that persons can actually understand and appreciate from a wholesome perspective what's going on. Because the reality,
I do get you. And that kind of begs the question because a lot of times, and this is a question I say asked a whole lot, does insider trading happen? And sometimes
let's not go down that road.
Nobody can answer that question, right? But sometimes you will see maybe there's information that is causing something to move, but the majority of the public will not know. So I mean, yeah. But anyway, we're not going to touch on that now. That's not fair to Dolla Financial that we're reviewing their prospectus and doing our weekly rant. So guys, apologies to those who are new. That's when the three of us come together. It's likely to happen. All right.
So what's the next part we're looking at, Jermaine?
The next part we're looking at.
Hold on. Whatever the next part is, this just looks like something I wanted to touch on that I've seen. So that same COVID-19 pandemic. So Dolla Financial is a loan company. That's what they do. Mm-hmm. Small loans, SMEs, etc. They are basically a direct competitor. I want to say it that way. So everybody has been saying they can't get loans from banks and stuff like that, especially businesses and so forth, right? This part, because the overall climate is the overall climate of the economy, the rest of the Caribbean, how things are going, interest rates going up, and so forth. So let's read this part just to see how Dolla is positioned itself. Mm-hmm. COVID-19 pandemic. No, come back up. COVID-19 pandemic has been a significant development for the company. The COVID-19 pandemic and the measures taken by local and world governments and governing bodies in response to the pandemic have significantly impacted economic activity. Let's put that out on the table first and foremost. So we know that everybody's impacted. All right, now let's see how it impacts them, because that's basically what we want to look at. So during the height of the pandemic, the Jamaican economy contracted 10.2% owing to the measures instituted by the government to contain the spread of the virus. Despite the challenges during the year, the financial sector still saw an expansion of loans during the period, according to the governor of the central bank. Loan growth remained fairly resilient, with the stock of private sector loans and advances recording year-on-year growth of 11.5% at November 2020 compared to a growth of 16.5% at February 2020, which means it went down, right? Basically, because it was higher in February. Although the pace of growth in loans has moderated, it remains above what we had expected in the context of the sharp fallout in economic activity, bolstered by continued demand for loans by businesses for working capital needs.
Yeah.
This was also reflected. Hold on. I think I lost myself. Reflected in the performance of the company as both, go back up now, as both income and net profit increased during the year. Like most businesses in the industry, Dolla was negatively affected by increased loan defaults during the early days of the pandemic. However, the company swiftly developed and implemented several core strategies to stymie the fallout. The company invested in its existing customers by implementing a customer assistance program for clients. Now, customer assistance program means grace periods, or something like that. That's when we had the other part in the big banks. What did they do? If you had a mortgage and you couldn't pay your mortgage, you had your loan for your car, you couldn't pay your loan for your car, they gave you a grace period for X time to say, all right, you don't need to pay until you kind of get yourself back on track, right? So let's keep going. Right? That's the word. That's what I was looking for. Thank you, David. Good stuff. So moratoriums were put out. So AKA moratorium. So So the company invested in its existing customers. I said that already. This allowed Dollar to develop an even deeper relationship with its clients and created momentum for expanding the loan portfolio when their circumstances improve. Great. That means relationship. That means trying to improve, and also word of mouth and everything else would show potential customers that Dollar Financial is a company that we want to come to give business to, right?
Yeah.
In our time of cash crunch, right? So says Dollar also shifted its focus to industries that thrived during the pandemic. These
Yep.
sectors included BPO, haulage and construction, and manufacturing. Right. The company also implemented strategies aimed at reducing expenses, which included successfully renegotiating some key contracts.
Yeah,
The
man.
implementation of strategies resulted in increased revenues and profits for 2020 and 2021. Because the company also maintained a diversified loan portfolio, so I want everybody to stick on this. The company's core functionality is giving loans. The increase in loan arrears was tolerable as customers were not heavily concentrated in any single industry. Now, I say this point blank. I am not very averse with the loan industry, but I heard a term always talked about many times, which is expected credit losses and how
Yeah,
long
that's the word. We
and how
definitely
long
on that.
yeah, man. And how long the loans, what is the period in terms of certain loans? How long, and I heard David actually mention it one time and it stuck with me. How long, in general, companies, you need to look on their loans, how long it takes for them to get paid, or should I
Yeah.
say their receivables, how long it take to get paid before they have to basically say, you know what, this thing in default, and we just need to write it off and take a loss.
Yeah.
So,
So
that's where I want David to come in at that point in time when we get to that point in the financials to see how does their loan book really look, because that's their bread and butter.
Yeah, man. Yeah, man. And
uh,
we'll
so
get there, right? So yeah, man. Go ahead. Go ahead. Go ahead.
so for persons who are listening and watching, you know, for context, uh IFRS 9 is basically what is she gets been referring to, and for the commercial banks, you know, it depends. So 3 months is typically your grace period, uh, without any quote unquote restructuring of a loan, or giving client a moratorium before you can actually consider that loan written off. The way how ECL provisions work, especially credit losses, so is that you have three stages: stage one, stage two, stage three. Stage one, normal. Stage two, heightened risk. Stage three is just really where you have the impaired loans at that point. What IFRS 9 does is that it requires you to make provisions based on the history you have already with your customer and client base, meaning they pay on time, uh, how much of your loans are, are taking longer to pay. Some they pay, for example, in January, pay in March after. So that's really what it is. And the thing is, we can check the company's 2020 audited to, see the ECL movement, and hopefully there should actually be a write-off provision there in the
They spoke
notes.
about it for the MDNA. They spoke about that increase
No,
in.
so what I was also saying was that I want to see if there's a write-off this written
Ah,
out in the
yes,
actual
yes.
audited.
Get you. Get you.
Because for context, in 2021, it was the largest ever write-off by commercial banks in our modern history of loans, higher than 2008, 2009, higher than the Jamaica Debt Exchange. So,
Mm. Yeah. I think we can pause here for questions again. The questions that we're asking now. So this type of business, persons, the state of the economy, and persons' ability to repay is their biggest risk because they do
Yep.
loans. So if their industry is impacted and those customers can't repay, that's going to affect their cash flow, is going to affect their profitability. Now, with loans, you can always do what's called refinancing, as we spoke about before. So if I was paying $10,000 per month, I may refinance to pay 5,000. That's going to impact the companies. So loan refinancing is typically more profitable for the company. It just expands the repayment. So if you've ever done a loan refinancing, you know that if you are paying, like, if you borrowed 10,000 at 10% interest and you pay back 11,000. If you have challenges and it's refinance, you probably end up paying back like 14,000, 15,000, but instead of
longer
paying
period.
$1,000 per month for 10 months, you're paying it 1,000 per month, maybe over 18 months or 24 months, right? But that's going to impact the company's cash flow, impact their ability to repay any loans they themselves have, because for loans, your cost of goods sold is the cost for your capital, really. So that's kind of what we're talking about here. It is the biggest risk, as we said, to a company like this. So it's something that's definitely worth talking about.
So let me just go through, and because of the comments,
You wanted to tackle this one as well?
We don't know that the recession is genuinely looming. I mean, everybody's talking about it, but it's a great comment, Omar. It's a great question to ask. But the thing is, everybody's talking about it on the global scale. There's a term called self-fulfilling prophecy. Basically, if you talk about it that much, maybe you make it real, right? Um, you genuinely don't know it's gonna happen until it happens. So the truth is, and that's the thing. That's the next thing too. A recession for the rest of the world
Well,
may,
a
may or
recession
may
for
not be a reception
Jamaica. That's
for
one
us
thing.
as well. Yeah, that's what everybody's scared of. So we base our should not scared, but concerned about that. If a recession for the United States automatically means a recession for Jamaica. Um, Again, you just have to. It's not wait and see. By the way, you just have to tune in. But I think, like from what I've been observing, a lot of the conversation has now been, it feels scare tactic wise, like the way how it's going. So in context of what we're talking about here with Dollar Financial, um, which is why I brought it up. I brought up that point of everybody must understand what this company does. They do loans and how it must tie in. You always hear me talk about how does things tie into the economy that the company works within. If you forget that and invest in a vacuum, then you're going to invest possibly incorrectly and get hit, right? When things go wrong the other way because you didn't choose to look at what the company was doing. So that's where we're answering now. How is the
Yeah.
company positioned? Even with a recession possibly on the horizon, cool. How is the company actually positioned? How does the intake of this money that they get actually bolster their capital outlay, etc., so that you know payments can continue, or they can sorry, not even payments, but they can give maybe a moratorium if it's required for certain clients, etc. How do they keep the lights on as it is?
They did mention a 95% collection for their delinquent.
Post post the official part of the pandemic in terms of not knowing anything about the pandemic, or pre the pandemic.
So it says our collections team has been working assiduously to increase the rate of collections with difficult accounts and have reported a recovery rate of 95% on defaults. Through analysis on customer behavior, patterns, and expansion of the credit team, Dollars aim is to increase the recovery rate by an additional 1% in the coming year. So recovery rate on defaults, the loan would have gotten to the default stage already, and then they were able to recover 95% of the amount that was outstanding for defaults, and they're hoping to bring that up to 96% within a year, right? And again, there's always going to have to be some write-off for this type of business. If it was a retail company, there would be provision made for bad or spoiled inventory, or something to that effect, right? So you're lending money, persons can pass, illness, loss of job, loss of income, etc., can impact their ability to be repaid, right? So that's something that, again, we'll get to. Well, we pretty much need to be talking about the MD&A now. I just wanted to kind of touch on the outlook that they mentioned here. So they have a whole section that they speak about the outlook for both Jamaica and Guyana, as in just showed overview, projections for growth, etc. I just wanted to share this one section that I would have highlighted. let me actually do here. So it says here the most direct impact on this crisis to Dolla's performance could come from an increase in the company's cost of funds, which could trend higher given the Bank of Jamaica's recent monetary policy stance amidst the high local inflationary environment. Right, so they're mentioning this as well as something that could impact their performance. We would have seen the BOJ rates kind of steadily increasing.
They're not stopping.
Yeah.
So
right?
this is something to take note of.
Yeah. So that's just something to note there. We know that inflation is 11.3% as of March, so that's something to note as well. All right, so we're gonna quickly go through the outlook, and then we're gonna get to the MD&A. So I think this part we can kind of go through here. So Dolla currently earns just a little over 2% of its income from Guyana. So though they're in Jamaica and Guyana, income from Guyana is just 2%, but they're anticipating, based on the economy, based on how things are projected to grow over there, that amount will steadily grow. And
Did they put how much?
How much what?
Forecast. How much they expect to grow, they want to grow it by? So it currently earns 2%. What do they want to grow it to?
No, they didn't share that. They shared projections as to how the country is projected to grow. Let me see where that is. I think that's on the next page here.
Yeah, that has to do with the company's GDP. Yeah, that's in the news. The company has its GDP, the oil pull. There's a lot of stuff going on with Guyana. That is true. But I would have loved to know, at least if they could have given what their projection, what their target is that they're going after. They got 2%. All right, so let's look at it.
Yeah.
So is there a chart that shows their breakout? There is a chart that must show their breakout currently by country. Is there?
No, I don't think there is. But what I did was just
highlight. The breakout charts are for the type of loans, for the security of the loans as well.
Yeah.
Remember, Chike, they only just entered Ghana last August, so there is not like they're in multiple countries where they're required to do a breakout like that.
Cool. So we just have Guyana and Jamaica. That's basically 2% Guyana, and that means 98% Jamaica.
Yes.
Yeah. And it spoke to the fact that Guyana, it pretty much doesn't have a fully developed financial services industry, so there's opportunity there for them. So it says here, Dolla therefore has the first mover advantage, being one of the first companies to introduce microfinance to Guyana. And it believes a large-scale sustainable microfinance sector will emerge to cater to the needs of the individuals and small businesses in Guyana that they're expecting to now come about based on their growth projections and the industries that will be built up, etc. In addition, the increasing investment and the booming economy may give rise to the needs of individuals and small businesses to expand or invest in themselves and their ventures to be able to monetize the country's growth. This will result in Dolla bridging that gap in demand for cash and supply, right? So that's one of the things that they're projecting there. They spoke about the Jamaica microfinance sector analysis. So it says, according to the Jamaica Association for Microfinancing, the sector was responsible for 20 billion. So that would be what the industry would have done, I guess, formally, or I don't know if this tries to account for those who are unregistered, of loans revolving in the financial system in 2020. There's an estimate of over 200 microfinance companies that are operating. However, more than 85% of them are estimated to be unregulated, right? Companies who remain unregulated as at July will incur penalties. Of course, these penalties would need to be enforced. Right, so that's one thing to also consider, because of the type of business that they're in. I figure, a lot of persons just operate. We were talking about it in the group earlier. A lot of persons can just lend money, right? Not everybody will go through a registered company or a formal company or a bank to borrow money, right? So you're also competing against those companies or those individuals who can just lend you some money. Right. It may not be the same paperwork. It may be just, easier to get that off the ground. So competitive rivalry in the industry is believed to be relatively high, especially in relation to consumer loans, as loans to the sector are relatively easier to access because they're based on consistent salaries. And it says, for example, the largest player in the industry has a consumer to business loan ratio of 9.3 to 0.7. That's business to consumer loans. And for them, this is evident by the company's consumer to business loan ratio of 1 to 2. I wanted to know who was the largest player in the market, guys. I don't know if you have that info.
You don't need to ask.
Who is
what?
it?
Largest player for who? For what?
For the industry.
No, like
For
it's
finances?
not hard. No, remember, Jeremy. You only have a few companies that are actually running above water, and you have the commercial banks. So it's one of a couple companies. So we don't need to be dancing around trying to figure out who it is. You get what I'm saying?
I get what you're saying. I like to kind of spell things out for everybody. That's my style.
I get you. But as I said, you can understand why I'm saying that. You'd have to be dancing around the place.
Yeah, man. All right, so let me try and get through the rest of this here. So there's the new Microcredit Act, which was passed January 2021. That's what they're saying here. Anybody who is in violation of that act come July is going to be subject to those penalties. All right, so we're talking about this in the group earlier, as I said, in the Telegram group. Some of the reasons why they would be pushing for this legislation and wanting to see it enforced, because it would essentially level the playing field in terms of now these registered companies having to pay costs for having staff to be compliant, filling out paperwork, paying fees, etc. Those are things that impact profitability of the company. So that's something to note here. This was just them at their opening of the Guyana location. So let's go to the financial highlights now. Any questions in the chat, we'll take them in maybe about 30 minutes or so. Let's talk about so a couple of things here. Everything that's on the overview, actually brought that up in Excel as well. So these are the highlights. We'll maybe look at the most recent year to see where they are now in terms of cash and the income statement, etc. But this is the overview for the past 5 years, and I added the trend line here so we can see the general direction of where the numbers are going. All right, so in terms of total income from 2017 till the most recent year, which was last year, would have seen growth from 23 million to 395 million in terms of total income.
Jermaine,
Mm-hmm.
to add some context, which is why 2020 looks so pretty, you have to understand that Dolla's financial year changed from June to December in 2020. So because of that,
So 2020 is really 18 months.
correct.
Mm-hmm.
And that is why the company actually provided adjusted 2022 numbers for you to understand. So just present that out there from now.
Yeah, man. Get you. Net interest income would have gone from 10 million in 2017 to 325 million. I'm wondering here, guys, if we should just maybe focus on the last 2 years.
No.
Changed.
Jermaine, if we focus on the last 2 years, it's best to go to the adjusted figures in the let's say part of the prospectus, because what you're seeing right there is going to throw you off when you're trying to get the last 2 years, because how would your loan income would have grown in 2020 when you had COVID? You understand what I'm saying?
Yeah, man, I get you. All right. All right, so we'll do that soon. All right, so I think the 5-year overview is maybe still worth going through. I know one of the things Chike would be looking at is cash and cash equivalents here.
And the loan loss provision, or ECL.
Loan loss provision. So this was what we were talking about earlier. I mean, this would be 42 million in this case for 2021. Liabilities 564 million. Total loans, this would be loans outstanding. Well, no, loans that they would have issued for the period, that would be 792 million. Shareholders equity.
So can I give some more context while you're speaking? So what you broke it out to actually show the loan, separate from the loan loss provision. What go back up, please.
Yeah, man.
So you're talking about 792 million disbursed then, but no. So remember, not all of their loans are going to necessarily be short term to that extent like that. You get what I'm saying, you know?
Yeah.
So the thing was actually which they actually provided was, you know, if the company had included a breakdown in terms of the tenure of the loans. That would have been pretty interesting because that could actually shown us the real situation. Because if you have most of your loans are basically which are actually secured 64%, then you actually want to know what is the tenure or breakout of most of those loans.
Yeah.
The average loan life is, for example, 2 years. You understand?
I think
That's
I
it.
think that's the average loan is 12 months, if I'm not
I see.
mistaken.
And for a company like this, these are the questions that should have been answered directly because this is the company's bread and butter in terms of what they do. Why we have to guess at this point in time, you know? David raises a very good question. Why this is what you do? This is how you make $1. You know, we'll see at some point in time, though. I'm sure.
Okay. Yeah, so I see Simon here saying loan loss provision is best looked at relatively. So maybe we can use non-performing loans. I
It's in
think
the
they have
prospectus.
that. Yeah, man, they have that in the. Well, they have non-performing loan ratio here, but we can look at. I think they
It's
comment
actually
on
non-performing loans to gross loans. That's what it is.
that's what this ratio is. Yeah. All right.
You can
So
scroll back down, Jermaine.
go again.
You can scroll back down, you know, so persons can see the loan loss provision.
Yeah. All right.
So as you can see right there, 2020, it spiked for obvious reasons.
Because COVID.
Yeah.
Yeah.
And for
Alright.
Tia Toy, so what that ratio is really is, and thanks for the question, Simon. So, non-performing loan ratio, it doesn't when it's broken down. So let's break it down simply. So if a loan has passed quote unquote 90 days, which is the standard time frame of declaring a loan being impaired or not performing anymore, that balance, that total amount of loans that are quote unquote not being paid or serviced, that total amount is the numerator, and the denominator will be your total gross loans. So when you see this non-performing loan loss ratio coming down over the years from 7 going down to 5 point something, 2019 actually it's rounded up in the case for Jermaine's spreadsheet, but when it comes on to the loan loss provision, the non-performing loan ratio, you want it to be trending down and you want it to be below 5% around that rate. Why?
Right.
Because although the company can collect on that debt later on, non-performing loans, at the same time, it's going to impact their cash flow. And the thing is, they don't want non-performing loans to be spiking too fast or too high. And for reason why 2020 had a spike was because in that time when COVID occurred, you had businesses and you had persons who were either laid off or just could not legally earn. Emphasis on
Moratorium.
the word legally, because the reality is when you cannot operate, you cannot get revenue, so you can't pay staff, and those staff members can't pay loans. So that is why you saw the number spike 12%. But as I rightfully pointed out, it is the figure we're seeing right there is actually tamed because of the fact that they first we acquired them in March 2020, and first we changed the financial year down to December. So if we were to have actually seen the real number at the end of June 2020, which is when dollars financially would have normally ended, but when actually was even higher. And and you're right about that, Simon. Most banks actually have or should have their non-performing loan ratio around like 3%. But in 2021, NCB's own spiked above 4.3%, I believe. I can't remember the specific number, but it doubled from like 2% to like 4% in 2021. And it's with respect to net interest margin, the definition is there, but it's really the net interest income that you earn divided by the average loans. Net interest income is just your interest income, the money you get paid on loans from your clients, subtracted by your interest expense. Interest
Okay.
expense is the cost of your funding. Hope that kind of gives
Right.
you context.
Yeah. Yeah.
And
And Simon was
what Simon says that's actually the net interest income is I have to agree that is if they have a net interest income margin, a net interest margin, sorry, 62%. Anything actually based on what I have been looking at, I normally have it set at 5%. If they're at 62, that's crazy.
yeah, man.
Like
Yeah, man.
that's really very good. That's beyond good actually in my
Yeah,
opinion.
I was actually going to say, I mean, and David just added great context there. So these numbers, without understanding of the industry or context, you would know how to judge them. And I
I
mean,
am going to question though the consistency part of it because okay, it's great that it looks that way in 2021, but then you go back. All right, so the net
but
interest margin has always been high. That's
that's
good.
that's what I was gonna ask you guys, because so here's how I look at it. How 2021 is performing is based on any adjustments they would have made in 2020 in spite of the pandemic, changing industries, changing the type of customers, adding those new products. All of those things would have added to how they would have performed for this most recent
Right.
year, and what they would have been shaping up to do for this year. And that's why I ask you guys if you think maybe focusing on just the last 2 years, because
Mm,
you
no, you know
you
me. I
I'm
can focus
not
on
saying
everything.
you only do that, and I'm just saying with the pandemic, it almost impacts everything since then, right? So the path that the company was on before, it either would have accelerated growth, show up any weak points. Like every company has almost had to pivot when we got to 2020, right? So that's where I was coming from, right?
And I agree. And taking it in context of the entire thing as we are talking about, the things I'm looking at that I concern myself with specific to this company, specific to being a potential shareholder in terms of return, not looking on it from a short-term basis of capital appreciation, but actually what you have to get from the company later on down in the years. If we're doing
Mhm.
that, I'm looking at my return on equity and on average equity. I'm liking the fact that what started out as nothing or not nothing, that's just based on the calculation, but what started out as a negative, let's take from 2018, negative 405, which is exceedingly high. That's basically being borne by the current shareholders of the company, right? Before it even lists. So
Yeah,
they're
yeah.
already taking that kind of hit. 405 negative. Then they brought it down to negative 14. Then they spiked up to negative to
Positive 93,
93%.
and then growth
And then
since then.
they're now up at 103%. So going on the general trajectory, it bodes well, it looks well for you as a person, as a potential shareholder, getting your return, because return on average equity is basically return to you as a shareholder, what you can expect. That whole talk of having dividends and all that stuff, yeah, that's where it's coming out from.
Yeah, man.
Additionally, too, you have their return on assets as well too, in terms of how they're using that, how they're getting return on the assets that they have. I like as well the fact that it has gone back up to 28. We can see that they've actually hit that number before in 2018. I'd like to see more consistency,
Yeah, man. What? Okay.
but I mean that's fine. And definitely what we've looked on the whole time, which is the net interest margin is just lovely. So at least you know so that consistently take an average of that figure basically of the years from since 2017 coming forward. That company has been up at least 60%, right? If you
But
take a
again, I don't know if we can look at the numbers at all in that way, because again, we're not judging. It's not the same economic condition for the last 5 years. You know what I mean? So taking the average in that case. So for me, I'm looking at how the numbers would have been positioned, and bearing in mind what David said, this is really 18 months. So it's not even a full year that you're judging with these numbers, right? And then we had 2021. So it's really to say, well, can they sustain what they would have started in 2021 and how things are shaping up for 2022? Um, that's kind of the way I'm looking at these numbers. So, I mean, it's not the same industry, but I think about Mailpack at the start of 2021, right? Amazing numbers. Everybody was saying, yeah, man, through the roof and everything good and great. But the pandemic would have led to just above normal growth for them. When things went back to quote unquote normal, we saw what they would have likely been on, which was still good, in spite of everything, but it would not have been as impressive as what you'd have seen at that point, because everything would have been kind of accentuated based on the climate that they were in. And in this case, I'm looking at these numbers to say, well, they would have been working with companies and industries that were in need of cash because of a pandemic. When it is that the pandemic is now, well, when things go back to normal and they don't necessarily need capital, will there be the same demand for business, for loans from
and
those
that's why you look at
and
and
stuff
that's
like
why you
that?
look at 2019 and 2018 as well to draw some kind of inference to what
Okay.
could be, right? And
Yeah.
that's the idea of, again, how we do things. The good thing of having multiple years to take a look on stuff is to have that idea of what it looked like post some what they call a black swan event, which was what the pandemic was, or is a black swan event. And you have that prior to 29, which is why I said you take the average of, again, this is a financial company, right? It does loans, the financial company. Net interest margin is the indicator of how they're doing,
Yes. And they would have been
getting
trending up
their income.
from,
It
yeah.
has been trending up. And even if you take into account the spike of 2020, which you definitely will take into account the spike, because people are looking for capital wherever they can try and find it, right? When it
Yeah.
settles back down, at least, as I said, at least you see them doing an average of 55 to 60%. So that's one part. And Simon says as well too, he had said, as we pointed out as well too, that it's true. If you have to take you should take, sorry, the return on average equity
Yeah.
in context of what the structure of the balance sheet looks like as well too, which brings me to another question that I love to ask. How much of their liabilities is over? How many times their equity is their liabilities? Based
Okay.
on, because equity is the ability to pay off the thing in one shot and done, right?
Yeah.
Company has to wrap up, equities one shot and done. If you have X amount of liability over equity, then you need to start asking questions. So we saw that the total liabilities were 517 million. Was that the amount that I was seeing in your sheet? Not here, but on your sheet.
In
Right.
Excel.
Yeah. So your
Yeah.
total liabilities was
There's total
565.
assets. Well, this doesn't break out current or long term
All
here,
right.
but yeah, I
Right.
mean,
No, I just want total. That's done. And then your shareholder equity is 314.
yeah.
So I mean, the next thing too is a good positive of this is that look at the total liabilities, look at the shareholder equity, right? Look at how the two have basically, the liabilities have trended upward, but look at the trend as well too, in terms of the build out of shareholder equity, how it basically has improved as well. Now also, shareholder equity is the difference between assets and liabilities. You need to know how exposed they were. So look at the total assets that they have. They have at least two times. No, not two times. That's not true. At least a half, 0.5, half times more assets than the liabilities. So when you take away the difference, you see how much equity it has. So there, I mean, personally for me, I like companies that have more shareholder equity than the liabilities in general. But then as well too, you asked a very, very relevant question. How much of that was current liabilities? Because that's the next thing too. The ability to pay your current liabilities, which is everything that is due at either 12 months or before 12 months. If they have a good cushion about that to be able to clear that off, if those current liabilities are very low, then long-term liabilities, I mean, it's not something you concern yourself with, or should I say you note it, but it's not a big thing. Current liabilities is what we want to know how they can cover. So as well too, I would like to know how their current liability is set up for their shareholder equity. How many times their current liability
Yeah.
is over their
Any
shareholder equity.
any comment on the 5-year cash flow before I go to the MD&A?
Well, like a couple comments I saw inside of the chat. My thing on the operating activity cash flow is something that I would like to see improve. Because that's the main part. I mean, cash flow from financing is them going out and doing investments and so forth. Sorry, apologies. Cash flow from investing is them going out and doing different investments. Cash flow from financing is them either paying their dividends or paying back their debt, etc. In that kind of way. Or if it's a positive, is cash flow, is cash coming in from when they're gonna intake money, like for instance this particular raise in terms of the IPO. But I want to see a stronger operation section from that part of the cash flow. Maybe it's going to be a bit difficult in getting that because what they do is they're a loans company. So as soon as the money comes in, they're supposed to be putting it to work, right? So yeah. So and as you see, Simon is saying, it's a financial, and as I said, it's true. It's a financial company. So you won't expect, from what I've seen with a financial company, funnily enough, in terms of my reading, you can't be hard and fast with cash flow for, like any other company, just because the money comes in and the money immediately
The
supposed to go
context
back
of the
out.
business is always important. Yeah.
Right, that is correct. So, I mean, but still, since that is the case, then, and that is the main case that you want, then we keep an eye on net in. Right. See, Simon said the same thing I just said. Cash going in, it goes immediately to work as a financial company. Then I need to be seeing a really high, good-looking NIM, which was the net interest margin. I
Which
need
is
that
which
up,
is what we looked at.
right?
Yeah.
Yeah, which they're up. I need to see that their efficiency ratios are doing well. I need to see that those loans, right, they're keeping that loan loss at or below that 5%. So I mean, yeah, he has really good camera, Simon. That's why his thing is so clear. He's got professional. Everything is professional for him. So yeah,
Oh boy. All
yeah.
right,
So
let's get to the MD&A though. Yeah, non-performing loans is key. So I
key,
mean, guys, if this is your first time kind of going through this kind of thing, always look at the numbers in context to the business, because the numbers don't mean the same for every industry, for every company. What's good for one may not be considered good for others, so you want to look at
right?
that in context. All right, Simon, I sent you the link. So if you're able to jump on, then let us know. All right.
So,
All right,
so
cool.
Simon
Let's go
just
back.
knows the ROE, which is what I was saying. That's
Man,
crazy.
yeah, man. So, yeah, let's kind of add some color to the numbers that we're looking at now. Let's go through this part. I think that's the best way here. So same numbers that we just spoke about, in terms of the highlights for the 5 years. They would have had this section where they now comment on it, why it would have increased, what it was attributed to, etc. So this is where you look at to get the context as to why the numbers are where they are, right? So it's very important to go through this and not just look at the numbers and move on, because you may not have the full understanding as to why it would have happened, right?
Right.
So they spoke to total income and revenues here. So they would have increased it. We spoke about that 56% increase over the period for 2020. And this increase is attributable to the launch of innovative products, which led to an increased loan disbursements, access to capital from the capital markets, to expand its portfolio, and an extensive branch network. and sound strategic leadership. We spoke about their wide range of products at the start in terms of the different markets that they serve, the different class of consumer, high net worth, taxi men, bar owners, etc. So that would have given you some context there. During the 5-year period, the company would have consistently increased its revenue each year, growing from 23 to 395 million, and that works out to an average growth rate of 76%. That's what they're explaining there. And the growth is explained by an increase in net interest income, right? And they would have kind of spoken to that already. We spoke about net interest income here. So that would have resulted in a 5-year average growth rate of 99%. It says here, though, the net interest margin, which is the net interest income as a percentage of average earning, which is what David was commenting on. I think Simon was as well. For the year 2021 was 62% relative to 81% for the prior period. And then it would have shown that the periods before that was 57, 51, and 35% respectively. The decline in 2021 is primarily due to loan book expanding significantly when compared to 2020. And at the end of 2021, their loan book was valued at 750 million. All right. They would have commented on the expenses here. Operating efficiency, we spoke about efficiencies being one of the things we look at based on the type of company. So it would have improved to 39% for December 2021 relative to the 72% in the prior period. So in this case, the lower number, the better. And this was a result of significant year-over-year increase in total revenues and reduction in non-interest expenses, with a much lesser proportional increase in operating expenses. All right. So hopefully that makes sense there. One sec, let me get on Simon. I have a feeling like Simon not going to turn on him camera.
Oh.
All right, Simon, you're on as well now. So anything to add there, guys? The part that I want to get to is the credit quality part. So you'll get to that shortly. Spoke about operating expenses here. Would have been down.
This is oh no, continue when you get to the next point.
Okay, would have been down 30 million or 16.5% over the prior period. The reduction in expenses may be attributed to the differences in reporting periods. Something that David pointed out again, that it was 18 months, relative to 12 months for 2021, right? So that's something to take into context there. Okay, I get you. Yeah, man. So the year-over-year comparison for December 2021 relative to December 2020, 12 months, and is discussed further in the section, and operating expenses grew 248%.
That's a concern for me, by the way.
Period, right?
That's a concern for me, by the way. You grew your operating expenses by 248% over 5 years. I think they want to get that under control, but let's see what happens with respect to efficiency. What I guess.
Yeah, it depends on why.
Look at the size of the loan book.
Yeah, in my but Chika, you kind of answered it a while ago. When you're looking at the growth in operating expenses, you have to look at that cost to income ratio, which is the efficiency ratio.
Efficiency ratio. Yeah.
Though we are adding new operating expenses, do those new operating expenses, so for example, does the new staff translate into increased income?
Yep. And Jeremy is about to go on to the next part in connection to that. David mentioned it in his tweet as well too. The company is about to enjoy 5 years of paying no tax. So that's also something very keen to look on in terms of how they've been performing. Go back, scroll back up. Not to the actual chart of itself. Profit before tax. Yeah, stay right there. So their profit before tax, I mean, heavily improved in 2021. Here's a question I have for you guys though. You're into another time when it's come. Well, maybe no, don't want to answer it that way. I am genuinely wondering though, are we at yes, the company is about to grow, but this has been, as you look at these charts, it's been phenomenal in terms of the improvement to the company. I'm wondering when they hit, when would they hit equilibrium? At what point they hit equilibrium? Because like look on this, their profit has never been anywhere minutely close in what they've shown here, right? Since this is PBT is dwarfed by what, three, four, actually is way more. There have been single digits for PBT every year prior to 2021, and it just shoots up by a whole that's at least nearly five times. That's five times. If you take the
I mean,
last
that
highest
is
point, which is
because
thirty-five
the
million,
loans would have grew significantly as well.
that is massive. Now, again, as I said from the start, I don't know the financial sector like that to understand it. But is this kind of behavior with a 167 where you are where your PBT is 5 to 6 times, and you've never done that before in a space of past past 4 years of itself, and the outcome of a total 5 years, is this possibly a one-off thing? And again, to
Okay.
even answer it, you have to look at the context of why this money was made in the first place in 2021, right? And if it can continue to happen. So
Yeah, I think Simon is gonna say something. Simon.
Yeah, man, well, I think Chike kind of again answered the question. It comes back to the context. And Jermaine, I was saying in the comments that you were making some very good points in terms of comparing where the company is in or was in 2021, is in 2022, and where it was, for example, in 2018. Um, remember, this company makes money based on what they call your earning assets or their loan book, right?
right.
They lend out money. So the larger the loan book, the more money they'll be able to lend out and the more interest they'll be able to collect from that.
Yep.
So if the loan book in 2018 was relatively small, then they're going to make a lot less money. But however, if you look at the loan book as at the end of 2021, even compared to the end of 2020, you'll see that there was a significant increase in just the size of the loan book. So they had more money. They had more money on hand to lend out. I'm actually looking for that now. Yeah. So at the end of 2021, that's $793 million, whereas 1 year earlier, the end of 2020, they only had 316. So in 1 year, they were able to be in a position where they could lend out twice as much and not. Oh yeah, thanks Remy. It's on the screen now. So if you look at 2018, the loan book was just 121 million. Again, this is why I say you have to look at these things relatively. What I would look at in terms of profitability is what was the margin, the net interest margin, which is the interest income that they're collecting on this loan book relative over that period. If it's better, then they're doing better off. And if it's worse, that means they have a larger loan book, but they're making a lower margin. And then we can start to ask that question. So I see there that the NIM, as it's represented there, is just 51% in 2018
18.
and 62% in 2021. So with that that loan book that has
So
grown by
they did
multiples.
almost 7 times, no, five
Um,
times the
yeah,
amount, but 10% growth.
But
exactly,
here's the interesting part. Go back to the sheet.
Hold on.
When they had only 324 million in 2020, look at the net interest margin.
No, but again, I think this is 18 months.
It says it's a year and 6 months.
6 months. Yeah. So from July 2019 to end of 2021, what we're seeing here. But yeah.
Yeah, that's a question that I would so a question that I would have for the dollar
Yeah, man.
team as it pertains to the interest margin is, you know, what's your average cost of funds? Meaning, remember how these financial companies work. They get the capital from somewhere, and then they lend it back out to
Right.
individuals that want it. That's what creates that margin. It's kind of the same thing that merchandising companies or manufacturing companies like Spurtree do, you know. They create something for cheap and then sell it back. They add
Out of
value.
pocket. Yes.
So when that spiked to 81% in 2020, boy, I'd like to know what loan products drove that. Is it that they increased rates for that year? Is it that the cost of funds was much lower, and, you know, as rates started to increase in 2021? Is that the reason why the net interest margin went down? But boy, Chike, the net profit before tax margin spike up.
Yeah.
It moved from
Again,
7%.
we get that as well too, but we're looking at it overall. That's great, but again, Jeremy asked the right question, and you're asking the question as well too. Like how we're taking everything else into context of after we get past pandemic and what made it sweet and nice. What did it look like before? Let's get an average. So 2018 was 31%. I mean, it could be high.
Past
2019
performance is not an indicator of future, you know.
of future, and that's the trouble. That's the most difficult thing to not to, to not have. But I mean,
I
you
mean,
can't hang on. You can't hang on that. You need to see now what happens when they go forward.
the question
That
there
that
from Ichika is the company positioned, or have they positioned themselves to do better than this number? I think, I mean, though very high level or a little bit vague, they've kind of, hinted at what they could potentially do to increase that, which is grow their income through Guyana. I think David mentioned potentially opening in Barbados. They do have other segments,
I
right?
said
Remember,
Bahamas.
Bahamas, sorry. Bahamas, 80% of their portfolio is just two products, right? So there are others that can potentially grow as well.
okay.
So those are some of the things I would look at to put this into context here. But again, with the increased promotion and visibility of the company through the IPO and other things, could they potentially grow their customer base? I think
Well, that would then genuinely be the expectation because 2020, all years prior, right? The jump between 2020 and 2021 is basically 2.5 times that the loan portfolio growth ended up being. If you are supposed to be taking that into context that they only have two areas of current focus, 2% in Guyana, 98% in Jamaica, and they're planning to move to all of the other areas to service the rest of the Caribbean, etc. You would clearly expect that as the years go by, maybe the next year you're looking at a loan portfolio of maybe a billion, etc. and over. If you grow that if you grow that 750, go back up to it. You grow it right. You have it there. You grow that 750.5. Come down. I'm sorry, I didn't realize it was down.
yeah.
Times 2.5%, basically. 2.5 times, sorry, not percent. 2.5 times. Because that's the growth from 2020 to 2021. Is average is estimate about 2.5 times. Then that's what it's supposed to be looking at in terms of growth of that loan portfolio servicing other countries. Or again, I come back to the question: was this just a huge undertaking right there in 2021 that it has grown, and is the average to be taken more from 2017 to 2020 in terms of in terms of the average growth of the company in that trajectory? That's something very that I will be looking keenly to see, because again, if the thing drops off and drops back down a little bit, if the loan portfolio drops down a little bit, I mean,
Yeah.
you have
Is,
cash and
is
so
there
forth.
is there anything that breaks this down? I didn't get to look for the note section in like the segment reporting, etc. At the back at the prospectus. Is there any breakout of income per loan category or anything like that? Do you guys remember seeing anything like that?
No.
All we
Jermaine,
have here is this one that kind of.
Jermaine,
Yeah, man. Go ahead, man.
I was gonna say, remember cognizant of the time and
Yep.
look at answering some of the questions that are in the chat, because uh, some of the things that I like to highlight include. So Chike mentioned the increase in expense, but I was going to say Chike that the loan book grows significantly. And if read the prospectus, they said that they're putting a CFO, a chief financial officer, a COO, a chief operating officer. They're putting a country manager, a country head for each country they're operating. And what I was also going to point out was that, which is something I'm surprised Jimmy has actually pointed out, Dollar Financial funding has increased because of the capital they've gotten in the form of debt. So, for those who haven't read a thread or haven't read it, Dollar has to get financing in a different way than a deposit-taking institution. What is the DTI? Your commercial banks, your building societies, your merchant banks. They take customer deposits and lend it out to the public, to borrowers, and they collect a higher interest income and pay deposits and so forth as an interest expense and have net interest income. The deposit base is a larger source of funding. In the case of Dollar, they can't take deposits on the behalf of the public. The company might eventually, for example, find another business line to generate additional income, but in all reality, the company is going to be using debt heavily to grow themselves. And the thing is, it's not necessarily being used to fund some financing activity. It's being used in the company's operation to grow. So the $1 million US promissory from German trading company, the loan from First Capital Holdings, the convertible bond, not convertible bond, sorry, the private placement bond from GK Capital Management. And something is to point out is that First Capital Holdings Limited has exposure to First Rock Private Equity, which is known as First Rock Global Holdings, and they have 50% stake in them. And the thing is, First Rock Capital Holdings more than likely is going to buy into Dollar Financial's IPO as well. So there's some things that you can actually highlight or could have highlighted earlier in the whole discussion. So when you see that growth in liabilities, everybody, remember, in the case of Dollar, and if you look at banks' financial statements, their operating cash flow isn't all going to look positive. It's going to look negative. But when you see them account for the change in deposits and other cash sources, you see them go into a positive increase in cash year over year. So that's really what you have to account to. And remember, guys, Dollar is not a
DTI.
commercial bank or depositing institution. So they're going to use liabilities, in this case debt, to lend. And the company has still at a much higher rate to compensate for everything else. And as Simon pointed out, they have a very high net interest margin, which kind of shows that they're lending at quite a sufficient rate in order to not just compensate for the additional risk to the clients they lend to, but also allow for them to cover sufficiently the cost of their funding, in this case debt. So you guys can look back further down in the prospectus, and this is why I said careful cheeky, because somebody got confused now. So for J Simpson, no. So for context, the key partners pool is for the selling agents, VM Wealth, and the managed funds. The clients themselves or customers are not entitled to this pool. If you're a customer of Dollar Financial Services Limited now, you can qualify to this pool. So that's just to give you context and information as to what's actually going on. And, I'm going to come back on later, but the time is kind of quite long.
Yeah,
And the thing is,
yeah, man. We're gonna split up the video. So I'm gonna this was a risk with all of us discussing, and I think there's value in it. It is live, so I can always try to trim the video afterwards, but I thought it would be helpful to do the discussion the way we did it for persons who may be seeing this for the first time, etc. Something that may add value to what we're talking about is this here. So what they show is the makeup of the loan portfolio. So we're
Actually, I was gonna actually say that while you're on this as well too, you had asked if they had done a segment breakout. I found that on on the document of itself, it's labeled page 80. It's note 5, segment information,
okay. All
and it
right, so
breaks out the
we'll
2 years.
get to that next. So it shows the industries they lend to and how they make up the whole pie. So that's one thing to note. And then the next one was the following page where they showed, remember they mentioned business versus consumer loans being 1 to 2 in terms of that ratio. So the unsecured business loans, the secured business loans account for 64%. That speaks to, us, thinking about, what if there's a default? What if they can't collect on that amount? If it's secured, there's some form of collateral there. Now, how easily they'll be able to dispose the collateral and get back that money is another question. But the total amount that's secured is about 67%, 33% would be unsecured between personal and business. So I think that's good to point out
Something
as
I like to
well.
also mention, when I see what Dolla has in terms of the breakdown, I'm thinking this of Cygnus Credit Investments Limited, who has everything secured, And the thing is, in their case, they have found, the route to actually make those companies that don't go to the banks work. So I think persons, could look at Cygnus can also get an idea as to, Dolla's operations and just, managing risk.
Yeah. And I wanted to point out this as well. You guys, this is one of the things I always look at, outlook and strategy. So the company believes that there is significant growth potential in Jamaica and the Caribbean for short-term personal and microloans to retail customers and businesses, respectively reaching a total of 900 million in the next 5 years, right? Based on what we're talking about earlier, the company will continue to strategically.
One thing I found weird with that was that in the assumption that the IPO is fully successful, they hit that total immediately.
Yeah.
So that's just my comment.
Question for growth. Is it a plateau? As I said.
All right, let's continue there, right? It says the company will continue to strategically expand its branch network locally and regionally to increase footprint, customer base, and market share, all things we spoke about before, making their products and services more accessible to our valued customers. Management also intends to pursue new strategic partnerships with financiers, suppliers, and customers that will grow its business line and customer base. In the short term, the company will prioritize the enhancements of its delivery channels and improvements of its customer experience through investing in technology. So there's going to be some expenditure there. The further development of the functionalities of their website, the use of mobile applications and social media to reduce the gap between them and their clients. Dolla will also continue to focus on improving the company's internal processes to increase efficiencies at all levels of its operation while delivering solutions. And the company's admission to the JSE will be essential to achieving its growth objectives. Remember, they're going to get that tax incentive. And it's speaking about Guyana there. Let me scroll to the last part. Or observations also suggest, Furthermore, since our entrance in Guyana, they've experienced stable growth in their loan portfolio and income, which is consistent with their expectations. Their observations also suggest that there is great opportunity for business loans, particularly equipment financing for mining and construction companies. Remember, there is this boom going on in Guyana now based on the discovery of oil a few years back. So this is based on the number of inquiries and requests that have been received. So they believe that it has significant potential to expand its loan portfolio, income, and profitability over the next 5 years. Okay. And that's where things are growing based on, you know, when they would have started August of last year to where it is now. So we can see how those develop over the next coming quarters. David, Simon, anything you want to add to this before we go to the rest of the notes here?
I let Simon go first.
No, man, you can go on. Pretty sure.
Okay. All right. So typically what I like to do for this part of the prospectus to just kind of see if there's any more context that can be added to everything that I would have read before. We did speak to the fact that persons who didn't know how to apply would go over that. I think it may be best to speak about that now, since we are coming to a close. So we'll speak to that now. I guess we can do that. I did mention that you could go to the VM Wealth platform and sign up. So sign up took, let me show you what that would look like. This is a platform that it has in the prospectus for you to sign up. As we mentioned, you have selling agents of Barita and Mayberry, and we assume that there's going to be more added. Somebody, I think, confirmed, JMB said it will be on tomorrow. And as the week progresses, I'm guessing that you may see more as well. But you just sign up with your information if it is that you choose to use Wealth Edge by VM. Enter your information here, enter your security questions, and then you'll be able to it will send you an email to confirm, and then you can log into your account. Once you log in, this is what you'll see. You'll just see the current offer. So the Cape one is still open, as you guys know, and then you'll be able to apply for Dolla Financial Services here if you choose to. As we said, we're not telling you that you should or you shouldn't, but you just hit apply. Let me actually sign in here 1 second. I want you guys to see my password, and I don't want Chike to sign in and try and order, use my money and all of these.
Me? I'm putting myself back on camera for that. Me?
Yeah, Chike, just buy me a truck out of the money.
You want a truck out of some money?
Yeah.
I don't need his money. I don't need his money.
No. All right. So I want to know better than to rile up Chike, you know. So this is a very, very simple application, really. Enter your account here. You enter the pool that you're a part of. So these are the ones that we mentioned, general public. I think with the investor briefings that are coming up, they'll clarify these for persons who are not aware. So company, applicants, and key partners, you choose this. General public, you choose that one. The dollar value, the minimum is 1,000 and share increments of 100. So that's over here to the left. So you just type in the number of shares and it will update the price. So if you wanted to go 10,000, it's showing you what the amount that you'll pay here. And then you just choose the payment method. Now, this is something in my experience. Well, let me actually zoom in here. I think I can go a little bit. So these are the payment options here. So in-bank transfer, brokerage transfer, margin loan for those who are using that, online transfer or VM wealth management settlement. Your advisor can inform you which one to use based on where your funds are, right? Then you just accept the disclaimer here that you've read and understood the terms, and then you just save it. I think you just submit from there, and that would be it. It should send you an email to confirm, and it's really that simple. So persons were asking if they need to create an account with VM Wealth. You would enter the details of your other account here, I believe. Someone is asking a question here. Do you need to have a VM account in order to use it? The answer is no. You'll need to enter your JSCD number here, right?
JCSD.
JCSD number here, which could be linked to any brokerage account, right? But you can only apply through either the VM Wealth portal directly or a selling agent. So if you have a Barita account or a Mayberry account or a JMB account or whoever else is added, you can apply that way as well. Right?
I mean, somebody
Yes,
somebody said that they tried to put in an application through VM Wealth.
Through this, yeah.
The platform, yeah, and it wasn't going through. There was some kind of error. Has anybody been successful in applying thus far?
I haven't tried.
I haven't tried.
Everybody want to do it tomorrow and crash the system. All right.
No, not necessarily that, Simon. Not necessarily that. So I have to get the funds together. Because remember, we need to be able to send proof of payment.
Yeah.
I mean, just select
And
bank
some
transfer.
people are using
So just
margin.
go back to the screen, Jeremy, and select bank transfer. In bank transfer. That is why I said that, Simon. So unless someone was having the money, but probably need to send some money over to the brokerage account. You understand? And for Jahan Phillips asking about Barita Boss, for the Barita's being confirmed as a selling agent, that's more than likely.
Yeah.
So, and there's a question that was asked earlier, which is why I said that I wanted us to ask questions intermittently and not get off too far. But somebody was asking if there's any penalty. It's around 656, Jermaine. Hope you can find the comment.
6. Let me go and try and find it.
So she was asking if there's any penalty for using one of the other associated brokers platforms.
Okay.
And you see, I was trying to.
Hold on. Oh, you could have just tell me to pin or star the comment, Soon find it.
657, Maurice Brown, 657.
Okay. All right, there you go.
So for context, and this was something actually I addressed recently. So it depends, and a big depends. And Roger, tell your officer to read the prospectus again. Apologies, I'm not trying to sound snouty, but for context, from the prospectus is publicly available, you can apply for the offer. I remember applying for an offer like less than 2 hours after the prospectus came out, and my friend said she saw my application form as the first application form when they're actually processing the IPO. So, for context, you can apply now if you have the funds to the IPO, Roger. And with respect to that question, you see on the screen. So in prior IPOs, for example, like an NCB Go IPO, sometimes either the issuer with NCB brought or NCB themselves would have absorbed the JCST fee, which is $172.50 right now. So the thing is, in that case, in that case, as a result, the fee would have been less if you use NCB in that case. However, as you can see in this case, VM isn't absorbing the fee, at least for members of the public. So currently, there's no disadvantage to using either VM or one of the other selling agents. And for those asking, really and truly, you should be able to apply for any public offer with your existing brokerage account, minus special events. And yeah, Roger, pre-open, for the purposes was published, that was pre-open in a sense. So, as I'm saying, if you want to apply for it from now, you can apply for it from now. And for Suki, Jermaine, one of the more recent comments,
Yeah, man.
no.
Yeah.
So what I was mentioning a while ago, you don't have to open an account with VM Wealth Management to apply for the offer. Once it's in JCSD or equity account that's in good standing, you can use that. And for it's in our Yanestra, or Lanestra, Arsenal spelled backwards. Lanestra. The base development will just depend on which pools you apply to. So if you apply to the same pool with 2 different brokerage accounts, 2 different brokers, then depending on what that amount comes out to, you do get allotted that amount based on what you applied for and the pro rata percentage. If you apply for the offer with the same offer with the more than once with the same brokerage account, the prospectus highlights where they actually consider those multiple applications as one application. And it's in the case where you use the same brokerage account multiple times, can you probably say, oh, I will buy more shares, and you forgot. You can't change the order amount. So if you use two different brokers, then you're going to be treated based on the pool you apply to. And if it's the same pool, based on the base development after, you know how the development would go at that point.
Yeah.
And Imran, you're talking about NCB CM, just contact the company tomorrow and ask them to see if they're going to be a selling agent. I told everybody to wait until Tuesday when the place is open and the holiday has ended. People starting to get scared that Jimmy was going to be a selling agent. Kimani, the thing is, if you apply to different pools with the same account, the issuer or the quote-unquote broker can still decide which pool they probably can treat you to, and can treat those multi applications as one order. So using different JCSD accounts is much safer than you using the same brokerage account in different pools, in all honesty.
So I mean, so we've seen some
only Fontana did their thing with L.E.A.R.N. Everybody else, once you applied using whatever brokerage account you used, and if you had more than once with the same account, the single application, and they would choose which pool you'd be allocated to, in essence. No, so Andre, so when I speak about pro rata and first pro rata and base development, we're speaking in future tense to an oversubscription. So if it's oversubscribed, they cannot take the extra money that was oversubscribed in essence. Not unless there's a provision in place for an upsized pool or something else. So we're speaking about pro rata, we're speaking about an event where the Dolla Financial Services IPO is fully subscribed to the point where there are more applications in dollar value than the amount that has been available to the public. And that is why we're speaking about the whole base development right now and the whole pro rata situation, because people are considering, if I use two different brokerage accounts and $50,000, instead of me putting $150,000 to this one account, I can put $25,000 to two different brokerage accounts, get the first $6,000 guaranteed, and get it. You know what I'm saying? So that's really just it.
And I wanted to say here, Simon, if you're still here, just to let everybody know that there is a discussion that Simon has coming up as a part of their monthly Stocks on the Rock session with the CEO for Dolla Financial. So Simon, still, since you're here, I don't know if you want to just do a quick plug for that.
Yeah, man. Thanks, Jermaine. So Stocks, I'm the the founder and the head rocker at Stocks on the Rocks. And we have a monthly meeting that we do. Starting last month, we started to interview various CEOs, and we have that rolling now. So this Friday at 7 p.m. at Palisadoes, Kadeen Mears, who is the CEO of Dolla Financial, and the co-founder, as well as the founder, and Gordon Swaby from Edifocal Group will be joining us out there at Palisadoes at the start of the jogging path at 7 p.m. Bring your drinks, bring your chair. It's going to be great as usual. And very important, we have security now, and we have a speaker and some mics. We're improving as it goes along. Chika, you won't recognize it.
Crazy as we need security. I missed one episode. I missed one meeting, and everything changed.
You have to clear your luggage, car search, and all that.
Tell you,
All
I'm
right.
telling you.
Thanks again, guys. I hope to see you guys.
Checking for
Definitely.
contraband and all these things.
Yeah.
All right, great. So guys, please do support, Socks and the Rocks if you're able to make it. And I know that if you have questions in general, the CEO has said that you can tweet at him. We're hoping to get an interview with him, but that's not confirmed. So I would say the best place to speak to him directly would be Socks and the Rocks until further notice. There is the investor briefing that's coming up this week. There's a few of them that I saw. Let me share the one that I saw.
Friday is the investor. No, it's not Friday. Thursday afternoon is the big investor briefing. Then you also have Taking Stock tomorrow at 8 p.m. Kalila Reynolds.
Yeah.
You have another briefing, I think, between 3 and 5. I think it's VM FET. And somebody actually sent a message in a group earlier today saying, that you could actually send your questions over for the whole Dolla Financial Services. It's a burning issue for you.
Yeah.
So, take those into consideration, guys. So you have multiple channels in essence to reach
Exactly.
the company.
Exactly. Yeah. And I mean, so again, as we were saying here, we're not telling you what to do either way. Our job here as L.E.A.R.N. Grow Investors is to present the information. I know we kind of went, multiple parts. I did warn you about this at the start, that what we do is, I mean, information is here. We expect you to read it as well. We just kind of meet here to go through the highlights, some things that are interesting to us. We'll outline them. We'll outline them. You want to speak to a licensed financial advisor if you're not capable of making your own investment decisions. But it's really for you to do the research. Now, there are a lot of persons who will invest with different goals, different timelines, different preferences. So there's no way that we can answer that question for you to tell you whether or not you should buy. I know that that's what some persons are waiting for. There's no way for us to answer that for 210 persons, each with different profiles and goals and capital, etc. So you really want to answer that question for yourself. We do have videos that outline the process. Look at the company, how they're using the funds, look at their projections, look at their history, look at where they're headed, and kind of invest in a way that makes sense for you. Each person even on the panel now has a different approach to investing, right? And we joke about it all the time, but we each are successful in our own way. So it's not to say one is right or wrong. So I just want to set that context there. We will add chapters to the video in the description. So this is the end of the video, but if somebody wants to rewatch, we'll put the chapters where you can quickly go to the section that you're interested in, and we'll actually announce that as well. So when we went through the overview, we'll put the minutes that was discussed in, and so on. Okay. Let me see some of the questions here. Did anyone address the EPS discrepancy?
What do you mean, Jermaine? I didn't see the question.
It was a question by Shadi. I think what you're asking here. So remember, before the shares, I think I know what she's.
I can explain it.
Go ahead.
For context, which is something I said, I really hope that we actually move standards back up and start bringing them down. This isn't our dollar per se alone, but in prior prospectuses, they actually outline the stock split and the additional shares being created.
That's what I was hoping to see for this one. It wasn't there though. So
for context, Dolla had about 20 million ordinary shares at the end of December 2021. Jeremy can go in the prospectus and find it in the intern with the audited financials. But the company had a stock split, which is already ended up at 2.25 billion shares now. And the thing is, because of that, if you do the EPS calculation based off of the 2021 numbers, the number of shares at that time, you're going to get those kind of high figures. Because if you have $134 million in net profit, which is 20 million shares, your EPS is going to be above 70, you understand? So that's really just it. I did some calculations based on their current existing share pool, and I got an EPS of a 0.079, which gives an EPS of about 12.6. Sorry, price to earnings ratio of 12.66 times, which is below the junior market average. So $1 divided by 0.079. So hope that kind of helps you guys.
You remember the page that it's on, Simon? Oh, Simon.
David, bring up this, share the screen so I can see.
Yeah, man. I think I found it. Let me share here.
No, Jermaine. Yeah, so that's showing the EPS, but what I want to show is
tell me where you want to show.
Share capital.
Oh,
right there.
Yeah, man. I see it.
You can zoom in so we can see what's going on right there. So as you can see, the company issued more additional shares at the end of the year, and as a result, that is why the company's share capital looks like the way it does right now. And those preference shares, those are related to First Rock Private Equity and First Rock Capital Holdings. But at least you're able to actually see why the EPS will look much vastly different, and by even my calculation for the EPS, the current one, and the trailing and the price to earnings ratio will be so different. So that's all that's happened. The company had a stock split or increase additional shares proportionally, which is why you have 2.25 billion shares.
And just bear in mind, and so remember we were talking about dividends earlier, and I said that if you're calculating what that potential dividend would look like if it's up to 50% of net profit, you have to divide that by 2.5 billion shares as opposed to what it was before. Right?
And Jermaine, I should point out, scroll down in the document. So I want to show people the last dividend they paid. It's a $34 million right there, but I want to break it down.
Right there.
Yeah.
All right.
No, but actually, I want to show the breakdown in terms of who got paid what.
Oh, this right here. Oh, where is it?
No,
where
so we'll zoom back out and go further down in the document. I'm going to show you.
Okay. All right, let me know when to stop.
Related party transactions. I waiting for that to come up. Related party.
Yeah, that's what I'm.
And what you see right now, guys, is so right there to the next page.
Right. Yeah, man, I see it. Just...
No, not that page, Jermaine. The next one that's coming up.
Oh,
what this is showing right here, this is showing who is actually funding to an extent, the company's balance sheet, in this case, the liabilities.
Okay.
And I was going to say, go to the next page. Yeah, right there.
It's on here, okay.
So, back in Q2 2020, between March and June, First Rock Capital Holdings got what was $180,000 US, or about, as you can see right there, $25.5 million paid as a dividend, while Legacy Capital got $8.5 million as a dividend payment. So at least you know that the company can pay a dividend, and this is at a time which is hard to understand because I said we don't know what the actual payment really was. You understand? And payment profit for that period because you know what I'm saying? So at least we know the company can pay a dividend.
I get you.
Because they got think about it, Jermaine. $15,000 in net profit, you pay a $34 million dividend. You understand?
Yeah.
But at the same time, company got a loan from First Rock Capital Holdings, which was their parent at the time. They took out their money in 2021. GA Capital helped with a private placement. So, in all honesty, it's a good look for Dolla in the way they get their funding right now. And we can go further down in the document to look at the risks, if anything, but the major thing that was pointed out, I think they're in the same risk area, was about the interest rates, because for those who know about the interest rates of Dolla, loans are fixed rates, which is good. So the thing is, they don't have any spiking levels in terms of additional costs related to the interest or finance costs on their books or interest expense. However, when it comes down to refinancing, because for those who don't know, company like Dolla, they're going to just roll their debt further down the road and just keep, lending as needed to keep growing the books of the company. The thing is, interest rates keep rising at this level and rate. It's going to make Dolla's ability to even seek financing a lot more expensive, because the financing they've gotten so far is quite substantial, but it is quite expensive. So 12% on a US $1 million promissory note, I'm there, man, just $1 Guyana. Where do you hear 12% on a US dollar instrument that's in just in Jamaica, but anywhere? Sorry, 11%. And they're being charged 12% by First Capital holders on a $100 million loan. And then, they were even being charged like 9.5% from the bond that GK Capital arranged, which kind of shows you that the company has a long way to go to actually scale up a little bit more, to become more credit worthy. So, when let's say they want to go into character rating, it's what we're seeing right now, the company is going to be facing a lot more difficulties getting relatively cheaper financing, which is why equity is so good. It's permanent. It doesn't carry additional cost except for dividends, which is optional. It is the ownership that really matters for some owners.
Yeah. All right. So what I'm thinking that I'll do, so guys, I'll ask you to watch out for another video. I think a financials only review may make sense. I'll go through the financials only and split that out in another video. I think that might help give some more context to some of the things that we're talking about here tonight. Definitely take advantage of the opportunity to ask any questions you have of the CEO. I think that would be a good thing to do. So look out for those opportunities. Attend the investor briefing. Please don't invest in something that you do not understand. It's not recommended. You might be successful in some cases, but if you don't know why you're successful, you're not likely to be able to repeat that. And we've seen in the past where certain factors like COVID and other things can impact the expected return or the actual returns that investments that come out get to realize. Okay. All right, guys, thank you so much for being here. I want to thank David and Simon. Thanks to Chiki as well. Guys, if there are any questions that we missed, just put them in the comments. Feel free to join the Telegram group and we can continue the discussion there. I'll go through the financials only in a video. I'll try to release that for either Wednesday or Thursday, still within enough time to get through and make a decision as to whether or not you want to apply. In terms of if you are interested, based on how things have gone in the past, the best thing to do would be to apply before the opening day. It is a relatively small offer. So as Chike and David said at the start, it's likely going to be very small allocations, which means that you want to apply as soon as possible if interested. But there's also opportunities to buy once it is listed, right? The IPO is never the only chance to buy. As our regular weekly discussions go, what I always say is that look for opportunities on the market now that persons are likely to be existing some positions tomorrow to get capital to go into this offer. So those are things you want to look out for as well. I always say watch out for fees, right? So you're paying fees to sell, and you're paying fees to buy back into. Bear that in mind. You have to know that that's worth the opportunity that you're heading to. And that's where I'd probably say in terms of, just what you want to look out for. Simon, David, any closing words before we wrap up here?
Yeah, Jermaine, I think you covered it pretty well. At the end of the day, as I said, you'll always encourage those that want to make that type of investment decision or no. And I think I can speak for you here. We're not here to give investment recommendations or to skew what people think about this. Is really just for education and just for helping out the investing public. Feel free to read the prospectus yourself. You can pick up on things that we didn't pick up on tonight and ask those questions. Hopefully you get a chance to ask that when Kadeen joins LGI, or you can ask at SOTR on Friday, or you can ask at the investor briefing on Thursday. So you get multiple chances to ask the Dolla team your questions. Yeah, that's what I'll say. And thanks for having me, Jermaine. I really appreciate it.
Yeah, man, thanks, Simon. David, anything you want to add?
I'll say, I wish you could have put my thread in the YouTube description, Jermaine. It will be there.
I search right now, right now.
Yeah, but I was going to point out that, I told persons, to just wait until Tuesday. And even the people a while ago get some messages and be like, these brokers to confirm. I'm like, people, wait until businesses open at 8:30 a.m. tomorrow morning on May 24, 2022 before you posit anything. We've seen Mayberry and Burry to confirm they're selling agents, but I
need to be
please
more
recommend you
patient.
to actually sit down and wait. If your broker is not a selling agent, it does not mean you cannot apply unless that lead broker's platform has an issue or some of the foolish happens. Understand that opening date is still a legal requirement. You still have to give people time to actually read the prospectus and everything else. And if they expect offer to be oversubscribed from your perspective, you should apply before. Remember that Jermaine mentioned you can buy the company list on the first day as well. And and also recommend you to be very careful about sinking all of their entire portfolio into an offer, especially for the general public pool, because the reality is we don't know. This is VM's first public equity market offer, just by IPO, since their own IPO back in 2007. Sorry, since their parent company's IPO in December 2017, which was Victoria Mutual Investments Limited. So that should really give you some context there. And in all honesty, I would just continue to do my reading and research. I give a pretty detailed explanation in my thread of what Dolla does.
And SOTR did a thread as well. SOTR summary if you're on Twitter.
Of course. I respect Simon, respect. But I say just sit and actually read about the company, because people are going to ask, should you be investing in a recession? You always should have an emergency fund at any given time. And the reality is, if you're not investing, inflation is going to be too silly with a stick. Because 11% inflation in Jamaica, 8.3% inflation in the USA, 14% in India. So the reality is, either going to earn more income or you're going to invest more. End of the day, get busy.
Yeah.
I think that's my end of my rant in essence.
All right, guys. Thanks a lot. All right. So, guys, I think that's it. Thank you guys so much. Thank you for those who liked the video. If you're here and you haven't liked it yet, please do. It really helps the reach of our channel. We're always trying to reach new investors. I've placed some links in the chat, links for our class. We have a free investing class coming up next week, Saturday. This one is about biblical investing and personal finance. So we're covering all the areas that the Bible speaks about as it relates to money, investing, debt, etc. So we'll talk about that. We do have a class every quarter. So the first two were about stocks for beginners. The one in March was about reading financial statements. So the one next week is about biblical investing, and the one in September is going to be about valuation, right? A lot of persons have been asking about, how to do valuation. So we're going to talk about that one in September. And then likely in December's class, we'll do another stocks for beginners, because I think that one is our most popular class. So you can subscribe to our Eventbrite. That's where we'll post all our upcoming events. And for any other announcements, I think that's it. Well, I also want to remind you guys that you can get access to Learn, Grow, Invest merch. I'll place the link. So we have the t-shirt that you've seen me wear on every single show here. We have tumblers that are available. mugs that will be available as well. I'll carry some of these with me on Thursday at the meeting. So if you're interested in purchasing those, you can get them. And we have some other stuff that's planned for later on in the year in terms of, merchandise. So stay tuned for that. Yeah, I think that's it. Thanks again, guys. We will see you in the next video, hopefully Wednesday or Thursday of this week. All right.